What if most of us are thinking about investing all wrong? Seriously, what if it's not about picking hot stocks or chasing the latest trend, but about becoming an architect of your own financial future? Yeah, think about that for a second. It's a pretty powerful idea, right? It means we stop treating the market like a casino, just throwing money around and hoping for the best. And instead, we start treating it like a construction project. We're not making bets anymore. We're drawing up a blueprint for something that's truly built to last. Okay, so what does this blueprint actually look like? Well, it's not some kind of secret, complicated formula. It's actually a map. A simple map that lays out the entire landscape of the market, showing you exactly where to build, and maybe even more importantly, where all the hidden dangers are lurking. All right, let's get into it. The Architect's Blueprint. This is a totally new map for your money. So let's lay it out. I want you to forget the chaotic, blinking stock ticker for a minute. Think of this more like an engineering diagram for your wealth. We're literally about to shift from financial guessing to financial architecture. And this right here, this is our main tool. It's called the Architect's Matrix. Now, it might look simple, but don't let that fool you. It is incredibly powerful. What it does is it visualizes a company's financial DNA by answering just two really basic but critical questions. One, how good is it at making money? And two, how likely is it to survive when things get rough? Okay, let's break down how this map actually works. First, you've got the two axes. The vertical one, going up and down, that's efficiency. And really, that's just a fancy way of saying profit margin. So the higher up a company is on this map, the more cash it's squeezing out of every single dollar it makes. Simple. Then you've got the horizontal axis, left to right. That's safety, and we measure that with its cash-to-debt ratio. The further a company is to the right, the safer it is, the more financially bulletproof it is. And here's where it starts to get really, really interesting. See how those two lines, those two axes, divide the map into four different squares? Well, those are four distinct zones. And each one of those quadrants represents a type of company with a completely different financial DNA, each with its own set of risks and, of course, its own potential rewards. And bam, here it is, the full blueprint. Now we're placing companies on the map. We can see exactly where these huge, well-known companies actually land. All of a sudden, names you know, like Apple, Verizon, Nvidia, they aren't just stock tickers anymore, right? They have a clear position on the map, a strategic role. This isn't just a random collection of stocks. It's a whole new way of seeing the entire market. All right, the Holy Grail, where every investor wants to be. So let's start with, the prime real estate on this map, the beachfront property, if you will. This is the destination every single financial architect is trying to build. Let's zoom in on that top right corner. This is what we call the Holy Grail. And, you can see why, can't you? Just look at the names living up here. Visa, Nvidia, Microsoft. These companies are absolute titans. They are truly, truly in a league of their own. So, what exactly makes these companies so elite? What's the secret sauce? Well, it all comes down to some really simple physics. First, they have massive profit margins. We're talking over 25%. That means they are wildly efficient. And second, they have way more cash than they have debt, which makes them incredibly safe. To put it simply, they just print money, and they owe almost nothing to anyone. It's an amazing combination. The perfect way to think about these companies is as toll roads. Just imagine it. They own a critical piece of digital or physical infrastructure, and they basically just sit back and collect fees from everyone who uses it. It is a powerful, super consistent growth engine. And this is the core of what makes a portfolio unbreakable. Okay, now for the flip side, the danger zone, where portfolios go to die. We've seen the best neighborhood on the map, so now let's go check out the worst. Because for every Holy Grail, there's always an opposite, a place you've got to navigate with, extreme caution. Okay, now look at the bottom left corner of our map. This is the danger zone. And honestly, you might be a little surprised by some of the names you find down here. I'm talking about companies like AT&T and Verizon. These are companies that people often think of as safe, stable, widows and orphans kind of stocks. But our map, it tells a very, very different story. So the physics down here, it's the complete opposite of the Holy Grail. It's like Bizarro World. These companies have razor-thin profit margins, sometimes less than 5%, and they are often just drowning in debt. It means they have to work incredibly hard for every single penny of profit they make. And that makes them super fragile, especially in an environment like today with high interest rates. So if the Holy Grail companies are our toll roads, Then these guys down here, they're the movers. Think about it. They're constantly hauling heavy loads, working their tails off for very little pay. And getting your head around this is absolutely key. Owning these companies is not a safety net. It's a risk. And this really just sums it all up perfectly, doesn't it? On one side, you've got the toll roads and the Holy Grail. High margins, tons of cash. They literally print money. On the other side, you've got the movers and the danger zone. Low margins, tons of debt. They're just burning energy to stay in the game. When you see it side by side like this, the financial physics become crystal clear.
Okay, so now we have our map, we know the good neighborhoods, and we definitely know the bad ones. So the big question is, how do we actually use this to assemble the machine? Let's get to it. Let's build the portfolio.
The strategy is actually beautifully simple. It's a 3-bucket approach. The foundation, a full 50% of the portfolio, is built with those amazing toll road companies we were just talking about. But then we add 2 other buckets to the mix. 30% goes into something called fortresses, and the last 20% goes into real assets. So let's break down what each of those actually means.
All right, here's the breakdown. Bucket 1, 50%. The toll roads, your growth engine. These are your Vitas, your Nvidias, your Googles. Bucket 2, 30%, is the fortresses. Think Apple or Tesla. These are your cash shield. Now, if we look back at our map, these are the companies in the top left quadrant. They're highly efficient, but they do carry more debt than the toll roads. And finally, bucket 3, 20%, is real assets. This is your inflation insurance, companies like Exxon and Chevron. Looking at the map again, they're in the bottom right. They might not be the most efficient, but they're safe, and they tend to do really well when prices are going up. See? Each bucket has a very clear, very specific job to do inside the machine.
And really, this brings us full circle, right back to that core idea we started with. When you have a blueprint like this map, when you have a clear strategy with these 3 buckets, and when you actually understand the basic physics of how these businesses work, investing stops feeling like a gamble. It becomes an act of engineering. So the final question really is for you. I mean, take an honest look at your own portfolio. What do you own? Is it just a random collection of bets, kind of scattered all over the map? Or is it a machine, something that's been deliberately designed, carefully engineered to be unbreakable?